Today, I'm talking with fellow financial advisor and co-host of the Keep the Change podcast, Mikey Smith. And we're talking about money today and how property wealth is actually created and how central banks of the world are on a mission to further digitize the money that we use. If we can understand more about how money works today, I believe that we'll be better equipped for what happens tomorrow when things change. Now, if you're new to this channel, I cover a lot of topics, both externally and internally. Mindset, how the system works, how the household works as it relates to money. If you like what we're talking about today, give us a like and subscribe on the way through if you haven't already. And let me know what you think about this topic or topics that we're bringing up today in this discussion. Hope you enjoy.
いただきます。
When someone decides or markets really well a good product, like say, I don't know, this new design of car or new design of house, and they can become scarce for a short period of time, but the market solves that because then another competitor comes in because there's money to be made there, and then the inflation goes away. But true structural inflation is only from new dollars chasing the same stuff, and the system now precludes it from being fixed. Because if we have actual deflation on a big macro view of the whole country and how the central bank works and everything, the debt can't be repaid. That debt can't be repaid with just your incomes. Everyone's income doesn't cover the pricing of that debt, especially when interest rates go up. So what you actually have to do is lower interest rates and issue more credit to make the payments on top of it, which is kind of what people talk about with like the US Federal Reserve. It's exactly the same thing. You know, there's 34 trillion and interest payments have just exceeded the military spend and stuff like this. That never gets paid. It just gets more issued out the back end to make sure that the payment can be made and roll the debt over. It's kind of like paying your credit card with another credit card. So that's the system we live in, though, and we just got to deal with it. And then the people that do successful are the ones that can either cleverly financially engineer themselves, like this is what happens in the property market, to get ahead by using debt cleverly and don't get caught out because it can be brutal, as a few people have learned over the last few years, or again, just provide value to the market and exceed the issue and take some off when it comes out of the property market before it goes back into the property market.
Yeah, I hear what you're saying. So
Yeah.
what you're basically saying is that the system works in that money is created out of the back door to kind of bring back into balance the ability to service the debt rather than actually reduce the principal through hard work and effort and sacrifice, just create more monetary units to help service that, which is analogous to what happens in the household as you top up your mortgage to pay for the trip overseas.
Yep.
And you use it as an ATM and you just keep on going. There'll be those people. But to outsmart the system, you have to either work harder and produce fiat currency at a rate which is faster than the environment.
Yeah, correct.
Or figure out a hack, which is to put it into assets that get inflated as new currency gets created.
Yeah, pretty much anything scarce we see go up in value, right? Because the dollars are unlimited, and a scarce piece of land or a classic car or something is fixed, right? There's no more supply of it. So yeah, it's pretty interesting, and sort of once you see all this, you can't really unsee it, you know?
Yeah. So let's start with just who the heck is Mikey, right? So tell us who you are, Mikey.
Yeah, Mikey is the owner of Guardiansmith Mortgage and Financial Services. We're trying to grow the best mortgage company in New Zealand. Technically, we opened the doors on the 1st of April 2022. We got our first new mortgage advisor apart from me in September 2022, and I just did the Christmas list the other day, and we've got 17 coming to the Christmas party. So trying to grow it, trying to get to 25 by the end of next year. I don't really have a purpose for it, but I just want to do it.
You don't really have a purpose for it, but you just want to do it. But you're doing a great job since 2022. So less than 3 years, if you reach your goal, you would have grown a team of 25 advisors.
Yeah.
Phenomenal.
Yeah. That's the plan. So
yeah, well done. So that's kind of like the day job, or that's the fiat mining.
Yeah, that's the fiat mine.
Right?
Yeah.
And apart from that, what are you into?
Well, previously, a little bit less these days, to be honest. Previously, I've been like a self-proclaimed student of economics because I sort of learned in 2008. I was coming out of school, and I didn't really know what was going on. I was just into like going to the skate park and trying to find a job, and I was playing golf and all sorts of things. But I knew it was weird, and I didn't really know what's going on. And I sort of started to learn more and more about it.
When you say you knew it was weird, the GFC that we just went
Yeah,
through?
the one in 2008.
Yeah.
Yeah. And I remember hearing stuff then about unemployment and how things that didn't make sense to me were good versus bad and all that kind of stuff. Like we hear it now, right? Like we need to get unemployment up. Like that just doesn't make sense in my mind, but that's what we need to try and suppress inflation. And I don't know. I accidentally fell into the mortgage game. I just met a mortgage broker, and she told me what she made in terms of income, and I was like, "What?" So I was straight in, and pretty much ever since then, I've just been in my free time learning about how the system works and trying to understand the banking system, where money comes from. I got interested in money.
Yeah.
And not just having money for me, but like learning about how it works. And 2020 was I remember thinking in 2019 when the repo market froze up in the US, thinking, oh, we're going to get a print soon. And then obviously 2020 happened and the print was much bigger than I expected. Globally, they all just copied each other, all of the central banks. And then I went into real overdrive for about a year to really try and learn a lot about it. And now we're in 2024 and I think there's another one coming. So yeah, did a lot of that. And then in terms of a lot of that stuff, I learned about Bitcoin and I went down that rabbit hole and put like 1,000 hours of learning into that. And then my actual joy is cars and fishing.
Cars and fishing.
Cars and fishing.
There
yeah,
you go.
Yeah. So that's what all of this is for, really.
It's for cars and
Yeah.
fishing. That's good.
Yeah.
So you do have a purpose, Mikey. That's good.
Yeah.
No, that's awesome. And so you were fascinated by money in the sense that you wanted more of it, probably for cars and fishing and
initially that was it.
Yeah, means to an end.
Yeah.
But then you became more fascinated with the nature of money, or where does it come from? How does it come into existence, and how does the system work that supports it?
Yeah, definitely. I can't remember who told me, but someone said to me, when a bank issues a loan, that's just made up. And I was like, what do you mean? Like people put their savings in there and then that gets lent out. And then when I started learning about that, I was like, wow. So yeah, it's a hell of a rabbit hole to go down. I mean, I think people should have a slight understanding of it, but I also feel like we shouldn't need to understand that. Like, yeah, we should be able to focus on, luckily my day job crosses over with this kind of stuff. So me knowing about it is helpful to me in my job. But, if it's not for a plumber, like a plumber needs to be knowing about engineering and pipes and how things work. And, I don't think they should have to learn about the plumbing of the monetary system to make sure they can get ahead. So yeah, but it has been very helpful, like in November 2021, I knew that we were going to have like a real hard couple of years. So I made some like financial decisions with not being risk on and stuff like that. And like looking around now and talking to my partner, even I was like, I told you this is what was going to happen. And it's very helpful because like I'm comfortable and I wouldn't have been if I didn't know all that stuff. So I would have just been like pile into everything and load up on debt and whatever, so.
Yeah. And for those that are maybe wondering, how does the plumbing work when it comes to credit creation? So most people would probably assume that the intermediation theory of banking is real, where you would save up your money, save up your hard-earned money, deposit it with the bank. It sits in a dedicated account. No one touches it except when somebody else comes in, they ask for a loan. The bank then gathers up all of the money from all the savings accounts, gives it to that Mr. Smith for a mortgage, and then they pay it back with interest, and that's how they grow the pot. The fractional reserve theory, a little bit of a move on top of that, where that becomes like the seed of capital that they have to have, and the bank is allowed to create some currency on top of that.
Yeah. And that sounds like a really good model. But what happens is the person that got the loan goes and spends it, and that person goes in to the bank and puts it in their savings, and then that gets lent out 5 times, and then the same thing happens, and then the next part gets lent out 5 times. So you can quickly see how like a multiplier effect that's the credit creation, right? And that's truly where inflation comes from and asset prices increasing all the time. Because, like, I sometimes say to people, just as like a thought experiment, like, if you couldn't get a mortgage, what do you think the house prices would be in New Zealand? And when you start thinking about that, it's like, oh, I only earn 100 grand a year. Everyone I know is on like 100 grand a year. Then we wouldn't be paying $1.5 million for a house, because none of us would be able to compete for that number. So you don't want to get too entangled in this stuff because it can burn your brain, but it's, generally speaking, it's not really what we think it is. It's and at the other end of the spectrum is, it's literally a ledger behind the scenes, which is quite archaic, really. And it just gets like balanced up at the end of the day, and to be fair, like, there are regulations and things that stop stuff from exploding because of greed completely, although we saw a bit of that in 2021. But yeah, it's not normally what you think.
Yeah. So it's kind of, because I always imagine it as in, say, a third world country, or even an electrician, if you've been to a third world country and you see the overhead power lines and how they're basically just duct taped together.
Yeah.
Very analog, right?
Yeah.
The financial system is very analog, with a lot of bits of duct tape, a lot of bypasses, a lot of oversight, and a lot of fixes that get implemented on the fly. And it feels like not one person, not one institution, not one authority has 100% visibility and authority over the entire system at the moment. And that's a good thing, but it's also a bad thing, because no one really knows the truth about how things really work, but they know that it works. And as long as they do their job really well,
Yeah,
things will keep on working.
That's like that's traits of like a monopolistic regime, kind of, right? Like, once someone is or an institution is so powerful and can't really be competed with, then new ideas and new ways to do things can't get in. Which is one of the reasons why I think Bitcoin is so special, personally. Because, I mean, if you try and open a bank in New Zealand, good luck. It's tough. I know there's a few people having a go at it, but
yeah,
it's almost like the regulation built up around banking and stuff now. A lot of it is for good reason, to sort of restrain from things getting crazy, but a lot of it works in the favor of the banks too, and that's fine. But it means that new competition can't come in and compete, really. And that's the same. That's just not a New Zealand thing. That's a global thing. Like, banking is the same everywhere. And man, if I came up with the system and ideas of banks, I would have done exactly the same. Like, how can you not? Like, it's so big, profitable, and clever.
Yeah. And I think a lot of Kiwis, they kind of look at New Zealand banks as all these Aussie-owned banks. They're extracting profit from New Zealanders, and they need to be regulated more. The answer towards this unfairness is more laws, more regulation. Yet when you see more laws and more regulation apply, you see more consolidation, not the opposite.
Yeah.
And so you don't actually get the competition. You kind of get more monopoly.
Yeah, exactly. It feeds into itself, right? That's a great way to summarize it. And really, what would fix a lot of the problems that people do have with it is more competitors. I listened to a podcast a long time ago. I can't remember who it was, but it was talking about in the US, and one of the US's, it's completely different because the capital markets are so deep, and there are so many people there, and they've got all the scale and things. But there's 5,000 different banks there. So you can go to the bank on the corner up the road here if you want a business loan, and go and play it off against the bank on the other corner, and they will calculate risk differently. Whereas here, it's like, no, it must be secured against a residential property. Business is too risky. They all fail within 18 months.
Yeah.
And it's really hard. So even if we do give it to you, it's going to be 15 or 20%.
Yeah.
But you can have a property at 6%. So yeah, it's a different world, and there are better versions of it out there, I think, but I'm not sure that it will fit in here anyway.
That's right.
So
okay, so let's talk about CBDCs, central bank issued digital currencies. When I think about evolution in the concept of money, I come to a very different conclusion to the type of evolution that I see being engineered by the pre-existing authorities. And what are your high-level thoughts right away And by the way, for those that don't know what a CBDC is, maybe let's start there. What is a CBDC?
Ethereum. Yeah, so I mean, a central bank digital currency is effectively a cryptocurrency that's issued from your country's central bank. And I guess a good example of it is of how you would feel that it would work would be PayWave on your card or your Google Wallet at the tap thing. Imagine just having your wallet on your phone, like your Google Wallet, or if you're in the States, it's like Venmo and PayPal and all this kind of stuff. And you can just tap your phone and the money gets transferred from one phone to the other type thing. It sounds like a great idea. Very like high level. It's like, oh, cool, that'll be instant payments, quick settlement, all of that kind of stuff. But the reality is I don't understand how there's not much of a problem here to be solved for the consumer in terms of like, we don't really need instant payment over phones that exist. The free market did that. We've all got, credit cards and visas and all of this kind of stuff that work just as good in any country. You can turn up, you might pay fees and stuff, but I'm unsure of what solution it's trying to be solved, and I think because of that, the solution is actually behind the scenes.
Okay,
what they're trying to solve.
But right now, you're right. I think I use mostly Apple Pay when I'm transacting at the cafe. I might pull out my credit card for slightly bigger purchases, and I want to get some points on it.
Yeah,
but these systems already exist, fast, instantaneous, from my perspective, and I'll use the one that I deem to be the most appropriate for myself based on cost and convenience, right? And so will the retail shop that I'm entering. So when it comes to CBDCs, if the sales pitch is, hey, we can do all of this as well, well, yeah, that's great, but I've already got cryptocurrency if I wanted to. Why would I want yours? It kind of feels like the old people have just shown up to the party with,
even our banking apps now. Like if I'm at ANZ and someone else is at Westpac and I transfer it, it ends up in there instantly. Like I know that's only recent, but so there's not, like, for me, for the consumer, there's not much of a problem being solved here. Like,
right.
So the reality is, when I start thinking about that, is like, what is trying to be solved? Because we know I think they say that the RBNZ is at stage 2 of 4 stages, getting it ready. And I think from memory, stage 3 is like starting testing out in the wild. And I just don't believe what's been said about it.
Okay.
They say that it's private. It will work without the internet. It'll work without power or something. And there won't be a backdoor to see the transactions, which is, I don't understand how that's possible.
Yeah.
Especially if they're going to be using a blockchain.
Yeah, that's right.
It's like extremely visible.
And just so that we kind of set the scene right now, 98% of global GDP is already at the stage where it could potentially be captured through a central bank issued digital currency system. There's 164 countries at various stages of a trial. It seems like everywhere you look in the world, there's nowhere where you can go where the central bank of that country is not at least considering it, or they already have and they've mothballed it, but they're thinking about bringing it back out again. So it kind of feels inevitable that this is going to happen, but in an environment where there's no real problem to be solved, what's your best guess as to what you think is the agenda here?
Changing behavior. So what I mean by that, changing purchasing behavior. So what I mean by that is, if we use 2020 and 2021 as an example, let's just go back a bit. So firstly, the system can't go for very long under a deflationary thing. They're going to have to issue more units, right? So if that's the base case of what has to continue for all of our fiat currencies to stay alive, we now know that is quite unfair. So when we do a big print and the cost of things go up, it used to just be the poor that get annihilated by inflation. Now it's crept up into the middle class, and it's quite a big, and the rich are fine. And excuse me, you want to try and get into the rich category if you can, to be honest, because then your assets are fine, you still own your stuff, and you've got money to burn. But if you're not in that category, you slowly get eaten away. And if there was a central bank digital currency, they could create interest rates and credit creation for certain people, so certain sectors of society, which would mean in their minds, they would think the division would be different. It would all flow differently anyway, and it would end up, I think, worse in the long run. But if they said, right, if you're poor and you're trying to save, you can have a 20% interest rate. You're rich, you don't need an interest rate. Actually, we're going to tax you 1%. And then changing that round and then trying to create fake equality. I still believe that, like, most humans, once they learn to understand this, would not agree with it. But that becomes possible, right? Because effectively it's programmable money. So they can choose what they want. And they could be like, we had the floods and the storms down in the Hawke's Bay. They'll be like, oh, we'll turn the printer on in the Hawke's Bay because they need money right now. Yeah, there's a whole lot of things that can be done with it. But those are the real solutions that they're after. They're not after me and you being able to send a couple of bucks.
Yeah. So it's kind of like you're into cars, so you probably get this. Like, there's difference between speed and velocity, right? But I guess the idea here is that the level of control that we have right now is at the quantitative level. Interest rates go up, interest rates go down. They can influence the amount, either more or less in the system.
Yeah.
But here we're talking about direction as well. We're talking about, hey, these people not in this area, because they've suffered a natural disaster, they have better purchasing power, even though the unit number might be the same. Maybe when they go to buy power that week, it goes way further.
Yeah, for sure.
And that's what programmable money can do. It is almost limitless, right, in terms of what can be programmed into that purchasing power.
Like, one step further than that is, pandemic, the toilet paper in the country runs out because everyone goes and buys like 1,000 toilet rolls because you think you're going to be locked inside for 5 weeks. But what if you got to the counter and it just said on your wallet, well, you're only allowed one because everyone else needs one. And that is like, I can see that getting traction because that sounds fair. But that's just complete removal of free market stuff. And
why can you see it getting traction?
Well, if the person next to me doesn't have any toilet paper and
you haven't got a square to spare,
yeah. It seems like it is a fair thing, but it removes so many other things about how markets work, as in, like what we were talking about earlier. If toilet paper runs out and consistently runs out, a new competitor will come in because the price is going up, and it will come in and flood the market with more supply. We see this in oil all the time, right?
Yeah.
And even gold, gold bugs, but even gold, like, the miners turn back on when the price is going up, and it actually increases the supply of gold at a faster rate, which suppresses the price, which is great because that's how demand and supply works. And when demand increases, the market comes in and fixes it. But if you have these market controls, there is no incentive for that to happen. So you end up with the government issuing you your toilet paper over a long enough time horizon. And I just don't feel like that's a good place that we want to get to. I feel like I would rather be like, there's a gap in the market here. I'm going to get into the toilet paper game.
I think the issue is that a lot of people would reach for equality before they would reach for the free market. That's my concern, right? Not saying that is a logical choice, of course, but I think that there feels like there's a rising tide of people that will want more government control because they still believe that more regulation, more government can actually fix this.
Yeah, it's so sad. It doesn't fix it. It makes it worse. And you really have to be able to zoom out and look at it on a big scale and a longer time horizon to see what's happening. But, a great example that I use for people just as a comparison is, like, we had more lending regulation, more building code, more stuff just piled in leading up to 2020, and house prices, capital gains tax, what they call it, bright line, interest deductibility, like all of the stuff that was just like brutal regulation on the property market. All those stories about people, because they bought a Kmart lamp, they wouldn't be allowed a loan. What happened to the property prices? So regulation didn't fix it. It shot up by 42% because, like, the nature of a human being, as much as people don't like to say it, is there's greed involved in how we act. And we will try and find ways to capitalize on situations. Even people that say that they're not capitalists do. You can see that when, like, people that agree with socialism, they're almost being capitalist about how strongly they believe in it because they're trying to sell something, which is hilarious, right? But it doesn't solve it. I mean, now that we've got property prices have come back a lot, and there's some unwinding of the rules and stuff like that, the reality is like those rules don't matter yet. Like, the properties haven't boomed up again, and that's because the percentage on the loans is too expensive and the greed's not there, and people don't believe it's going to go up again yet. I think it's coming anyway, but
So yeah, what you're saying is that sometimes what people want and what we vote for and what we ask for is harmful when it gets implemented. It feels good at the time because we're scratching that equality itch. Maybe it's connected to how we grew up in our family, which is often a socialist environment
for
when we're
sure,
kids.
communism.
Yeah, totally.
Yeah.
And so when we get into the real world,
Yeah.
we sometimes yearn, I think, for what it was like when we were a kid, and we kind of want to recreate the family, which is great. I can understand it, but it just doesn't work in the real world when you have other actors that are competing for the finite amount of goods.
Yeah, I think for me personally, if I could change one thing in New Zealand, it would be for, like, we're complex people, humans, and I think Kiwis in our culture would do really well from understanding that we can be self-interest and care combined. So you can really want to do good and even be proud of doing good if you do achieve it, but you can care for others as well.
Yeah.
Those two don't have to be separated.
Yeah.
And I think if you can sort of operate in that manner, because if you can be self-interested, you don't become successful without providing some form of value, which means other people benefited from it. Otherwise, you don't get paid. And if you don't get paid for the cost of the effort that you put in, you go broke, which is the market telling you that that didn't work, try something else. And then when you are successful, as I've experienced a little bit of success for myself and I've met more successful people, man, they self-tax themselves hugely. They're giving away money to charities. They're, becoming mentors for other people in their field. And it's just the opposite of what you hear about in the media. Like,
You're onto something really profound, because like it is absolutely true, and you've seen this. The more people that you meet with pre-existing levels of wealth that have got there through genuine hard work and working within the capitalist system, they are the most generous people that I have ever seen, and they accomplish so much good
yeah,
through their work and through their way of thinking and just their interactions. However, I think the people that have the socialist or even communist mentality, they assume the opposite, and so when they try to adopt the capitalistic strategies,
yeah,
they assume that they shouldn't be generous, which I think is so perverse, because they become the version of the thing that they despise without realizing that what they despised all along was actually the good.
and man, if when you start getting deep into this, it basically comes back to the money printer. That's what drives all of this. Like, I haven't been into it, but I in 2020 I was like, oh, I think I tweeted like, get ready for the Commerce Commission to look into supermarkets and petrol stations. And then sure enough, like 2 years later, they announced they're looking into it. And I think I saw a headline the other day saying that supermarket margins aren't price gouging. They're like between 1% and 3% or something. But that part won't get read, and everyone still thinks that, if you own a supermarket, you live in Remuera and all of this kind of thing, and that's great. They must be price gouging. But really, the inflated cost of everything just comes literally from more units in the system.
Yeah.
It is the supermarket is just the place you go that's providing the products and the goods and services that you need, and they need to do it profitably. Otherwise, it will go away completely.
So what you're saying is that it's a rational response to increased money supply within the system to increase your prices because your costs are increasing.
For
You're
sure.
just trying to adjust your margins all the time so that you can pay your costs, which are going up as well. But that gets interpreted as, no, it's the supermarkets that are the source of inflation. It's the greedy business person.
And then capitalism gets blamed, which is incorrect. So, like, I'm a pretty big unapologetic capitalist, right?
Sorry.
Yeah. But only because I feel like I understand it a bit more. I didn't used to be. I used to be the opposite, like we need to help people and do this, but the best help I got was learning about it and making sure that you understand, like, once value is provided, the price exceeds your cost. And that's a lot. There are parts of the economy or even global economy that, some of this monopoly stuff, like the big tech and stuff like that, that's interesting. And, I feel like it's still because of the printer, but I do feel like they should be split up or something around that, because the power is insane. They're more powerful than governments.
And so bringing that back to central bank issued digital currencies, one of the stated, I guess, goals that they're trying to achieve is to maintain monetary sovereignty. So here in New Zealand, Australia, Canada, the US, I guess every central bank wants to make sure that people go to them for the money, not PayPal, not Facebook, not X or whatever, right? They want to make sure that they maintain sovereignty over the credit creation. So what is so wrong then with that? Because don't we need a stable financial system?
Whoa, this is a big one to unpack. When it comes to that, then just remove the tax on transactions of Bitcoin and let people choose. If you agree with having, sovereignty so much, just let people transact. I think that guy, Javier Milei in Argentina, basically said you can use whatever currency you want, which is interesting, right? Because if you look at Argentina, I watched a couple of documentaries on Argentina, and it was, sadly, after what I've learned, it kind of looks like looking into the future. And it was around inflation, what the documentaries were on. Peter McCormack did one, who runs the What Bitcoin Did podcast.
Yeah.
And it felt like, I don't know when, but sometime in the next 25 to 50 years, it feels like we're going towards that picture that was in that documentary, and it just chews up people's ability to go and be productive, because they like, these people literally were saying, like, I have two jobs. One's being getting rid of my crap notes and turning it into US dollars as soon as I earn it. And there's black markets for currency exchange and all this kind of stuff. And then Malay comes along, and he's a pretty interesting character, but he's basically like, use whatever you want. There's no more rules. And it'll be interesting to see what gets adopted there. Normally, when that kind of stuff happens, it's US dollar first. But they're also a big country with potential to be a huge GDP and they've got resources and all sorts of stuff, and it's complex, and there's IMF loans, and man, who knows where it actually goes. But I think if you wanted sovereignty, you'd do that, not just say, here, this is going to be what we use on your phone.
It's a variation of the free market principles, though, right? But it's saying, hey, let's allow there to be let's allow there to be a free market with money. People can choose, right? Like, people can choose, and we can trust them to make the very best choices, and the free market forces will cause the very best to be adopted.
This happens with lots of things too, like this happens with like even languages. There are thousands of languages in the world, but there's a few really big ones. And when you get into looking into it, it's the ones that have the most complex understanding of everything that can be, the English language. And I think there's bigger languages. I think Spanish. I think even one of the Chinese languages is up there now. But basically, when you look into the English language, one of the reasons why it's like, quote, one or used in multiple places in the West and in the biggest economies and stuff like that is because it's so detailed, and you can explain so many things. Like, looking at into a textbook, if you do mechanical engineering, about how fuel injection works and all of the chemistry behind how it works and everything, and it becomes a competitor, and that's why a village in the back end of Mongolia, that language that gets used between a couple of different little subset villages there is not the prominent language, because it's not the best, and it's not the most efficient, and it's not the one that we've decided to use to be able to grow and evolve. And that's the same with money. But we love to try and censor it. It would be like saying, you're not allowed to speak English anymore. You have to use this language, this one that's on your phone and you can transact between people.
Or you're not allowed to use certain words.
There you go.
Or you have to start using other words to describe other things.
Yeah. I mean, we're seeing a bit of that. But, you know, the money is almost a language in a way, the way that we use it to
express value.
Yeah. And if you go down a road of saying this is what you have to do, then eventually the human race won't develop. I reckon a lot of the reasons why even the globe and the West has been so successful, even though I think the money has been broken for, I mean,
since 1971, perhaps.
Yeah, even earlier, you know, Federal Reserve and all that kind of stuff. Basically, since the creation of true like fiat and then the conversion into digital and stuff. Part of the reason why we're successful is because of language and communication. And we can pass around ideas and develop them and have disagreements, then work on it and figure out a solution and how this problem's come up and what do you think about this? And you get into mathematical equations and all of this stuff. And again, like that little Mongolian village didn't do that. So
survival of the fittest.
Yeah, and I think this is the biggest example of the free market working, right? And I just think that telling you what money you can transmit value with is kind of like taking away the English language.
I never thought about money as an expression of value in the same way that language is an expression of the human condition, right?
Like an expression of value as a way to communicate, because you're like, man, you did such a good job, I'm paying you for that.
Yeah, and to interfere with that, to act as an agent or a ticket clipper on that transaction where you're clearly not adding value, you're taking away value, then you're also trying to control the outcome as well.
Yeah.
And again, CBDCs, it's the same sort of concept. Is that kind of what concerns you the most? Is that it has the ability to influence two parties who want to have a free market transaction with each other?
For sure. If the price of the money is changing between me and you, then our communication gets disturbed. And that becomes
like rent control, right?
Yeah. That becomes an issue over time. Again, it feels like it's a good idea for the immediate effect because you have more than me. I'm going to get topped up by CBDC so that we're even. And now we can play on the same playing field. Like I can understand how people think that makes sense. But again, that's not how we've ever developed efficiently over time. And it actually stops long-term growth from happening.
Yeah.
Yeah.
I don't know like how I've only kind of really just clicked on this. I've heard people talk about this next topic, which is connected to CBDCs a few times. The Digital Identity Services Trust Framework Act 2023. If you have this value, this programmable money, which is programmed by the central authority, the central bank, and it's out there in the wild, it's great. It doesn't actually mean much unless it can be connected to you as a person.
For sure.
But in this digital transformation that we're in, where money is going through a digital transformation, and for good or for bad, we are going through a digital transformation.
For sure.
It's the marrying up of those two things, I think. Do you think that the digital ID sort of move, I'm not going to call it a push, but that move is somewhat a prerequisite for where central bank issued digital currencies will take us?
I don't know how it works without it. Yeah, they have to be tied together.
Yeah.
Which is funny because like we just see the importance of like notes. Yeah. If we zoom right out, it's like, well, cash does all this. Yeah. We can transact without the bank even getting it. You know, and you see this. Where do I go with that? Better be careful there.
Are we being careful? Are we?
Well, cash. I think cash is like, in terms of a fiat system, cash and notes cash is just so important. You know, being able to transact freely. And I've seen those memes online actually of like this $50 starts here and it goes to my barber, and my barber goes and gets his lunch with it, and then he gets past it and blah blah blah, it goes back, and then it comes back to the person who got their haircut type thing. And that's so true, except that means that the tax man got cut out, which is illegal. And we know that you can't do that. And there probably is still these days, even though I think it's much less, still a bit of that happening, but this system would make sure it never happens. Which is another goal behind that we don't know about, probably. And if you want to do that correctly, then that needs location data, identity tied to it. There's man, the digital ID thing is probably something that I'm quite uncomfortable with. But honestly, I just got back from America and I've been flying a bit recently. We kind of have it already in terms of borders. Like even our passports have an E thing in them, and you scan them, and you stand there and take a photo and look into the camera, and it scans you and checks that it's you, and all of that's recorded. That's in a database somewhere, so they can tell when you're coming and going. But I don't really like the idea of it for going to the dairy.
Yeah, I'm going to read you something that not many people would go here, but when we're thinking about our future, right? So this was written 2,000 years ago, Revelation 13:16.
Wow.
He, the false prophet, required everyone, small and great, rich and poor, free and slave, to be given a mark on the right hand or on the forehead, and no one could buy or sell anything without that mark. Are we seeing...
That's pretty much what we're doing.
Are we seeing the mark of the beast?
That's interesting. So a lot of the times when I have something like that to answer, I think about in 50 years' time, just so I can try and really take a bird's eye view of the whole scenario. And probably before CBDCs were a thing, or before I knew about them, I zoomed out and thought, in 50 years, we won't have a New Zealand dollar. Something else will have to do it, because houses can't be $1 trillion. They actually can. They are in some countries.
Yeah.
But because of that, I think surely the central banking system around the world knows this. Like,
it's finite, right? Like, you can see that it can't get...
eventually the division gets too far, and people don't know why, but we have civil unrest and because of that kind of thing, and they still don't have the education to understand that it comes back to that. But central banks and people that consult with central banks must know this, surely, because they're the central banks. They know how it works, and the number compounds, and eventually it goes vertical, and you can't do anything about it. But I think the CBDC, like the stamp, is one of the smartest ways in their minds that they've come up with to provide some form of solution. So I think it's inevitable, regardless of what you feel, that because it might give fiat currencies another however long before they die.
So people in that position of power and authority, the most likely tool that they're going to reach for will be some sort of technology that helps them to continue doing what they're doing, but do it even better, right?
Yeah, and it's like, again, it's that short-term thing, right? It's like, this can prevent civil unrest. Makes sense.
Yeah, it's necessary for what we're going through right now, right?
I can imagine if I was in those shoes and stuff like that, that if someone presented a CBDC to me and that we can have, individual stimulation everywhere and prevent peaks and troughs and economic uncertainty and all of that kind of stuff, like, that sounds like a great idea. And they're not Bitcoiners in these central banks. Like, they're not thinking that way for sure. So this would be like surely a leader in terms of an idea. And they might think that it can extend the fiat cycle for another 100 years or whatever the number may be, but it's an extension. And I kind of actually agree with that part. Like, it is an extension, and it probably will slow down
the degradation of the system, right? Which is kind of important for the fabric of society. Like, we both agree to a certain extent that the current system is probably outdated, it's fatigued, it's being held together with duct tape, it's unfair, it's creating bad outcomes. I could probably go on all day around what we think about it. But we also know that if it was removed and replaced with something better, the disruption that would occur, like Bitcoin fixes this, but not instantaneously.
No. And it's interesting. It doesn't fix it instantaneously, but I can tell you that my life has completely changed in the way that I think, because I have a savings account that I can trust. It's quite, I do think, if you do want to learn about it and get into it, you have to do your own research. I don't think I can just tell people that like it's a good idea.
Yeah, and there's layers, right? Like we were talking about this before we hit record, how I have conversations with my wife differently around our future because of the confidence that I have in a savings technology that I've learned about, right?
Yeah.
Whereas I think when you're first learning about Bitcoin, because we have this, we'll call it the fiat mind, naturally we convert it into what the potential is for this asset to create more fiat currency for us in the future. When in reality, what we're doing is we're converting our own human time and energy into a digital asset on a blockchain that's outside of the realm of anything else that we've ever seen before. And it's quite a different concept, right?
It is. Even the volatility of Bitcoin has been helpful to me because it forced me to become a profitable operator in my day-to-day life, which means I really had to work out to make sure to pass on value to people. And you can't be leveraged, because if you need savings at some point and it's just had an 80% drawdown, it can ruin you, eh? So
yes,
I went through all those stages, and I think once you've done like a 4 or 5 year stint, you end up in a
after your face gets ripped off, you learn after one cycle, right?
Yeah, and it is kind of nice knowing that I got some words in my head, and well, you can even do multi-sig and stuff like that in different countries and all sorts of stuff now.
Yeah,
they can't have it. It's crazy. It's such a profound technology, but I mean, it's the complete opposite of CBDC.
It kind of feels on the surface, especially if you haven't done your research, it feels on the surface that a central bank issued digital currency is an evolution of money. It feels like, oh yeah, that makes sense. I log into my banking. It's pretty much digital right now. I don't use cash. So what's the big deal if it converts into a CBDC? I don't understand crypto, so I don't really care anyway.
It basically makes sense.
Yeah.
It's interesting, eh? Like, and if you don't understand this stuff and you're just going about your day-to-day life, and then one day you wake up and you've got a CBDC wallet, like, and then nothing really changes, you just go and pay for your fuel with the CBDC instead, you'd be like, oh, that's cool.
Yeah. No real change. And so when we're thinking about investing, right? So let's say, bring it in the context of buying real estate. So I'm a real estate investor. I'm going to buy houses. I'm going to use debt to leverage up. So I'm effectively shorting the dollar, and I'm putting it into scarce resource, which people are competing for. Over time, they're going to grow in value. I'm then going to sell property at a higher price to repay mortgages that haven't gone up. And I'm going to make a return. So maybe that's my 20 to 30 year strategy, right? What I'm obsessed about at the moment is just this lack of understanding around risk. We're thinking about risk with our investments, but we're not thinking about risk in 20 to 30 years time when we convert it back into a form of liquidity that we can spend. So like, that's what's driving me in this like season of me kind of digging into this topic a little bit more.
Nice. I love risk.
Tell me about that.
Risk. We don't really take risk in New Zealand.
Well, define risk first so that we're being clear, because there's a couple of different ways.
Risk is trying to do something without, or trying to make a decision without having all of the information around what you're trying to do. Because if you knew all of the information about the decision you're trying to make, it wouldn't be risky.
Uncertainty of outcome, right?
Yeah. And when it comes to housing, maybe we don't even calculate the risk at all. We just go, recency bias, boom, let's roll. And that probably happened a little bit in 2021, right? And then we have the downturn and stuff like that. But longer term, man, it's weird how we back property over ourselves. I'm quite happy with real estate as a store of value. There are better performing things out there. But also, I can't deny the fact that it works really well, and I think it will probably continue to work well as a store of value to protect, the currency dying. But yeah, how risk works is so interesting because, man, we don't even understand it properly. I think for me personally, after all of the learning I've done around free markets and things like that, and people ask me how I grow quick and like these questions like that, and they say, "Man, you take some risk, and you save in Bitcoin. That's risky." But what I understand way more about myself than real estate, way more,
Okay.
and way more about how I can control things, and it makes sense for me to take risks like I do. Um, and I don't think we are comfortable with that as part of our culture. It's a bit of an outlier type thing. Like,
We're taught that risk is bad.
yeah, and risk is not bad. Risk means that you can get outsized returns above the average if you're willing to take risk. And the way is to really focus in on something and be almost obsessive over it, and then you get access to more information about the risk that you want to take, and then it's less risky, and then you can make the bet.
Back yourself,
Yeah.
back your winners.
Yeah.
So with property, let's say you're using that as a strategy to grow more property, right? But at 20 to 30 years in time, you sell that property. I guess what I'm getting at is that we're putting the increase in value into a form of money in the future, which is definitely going to be a different form of money than it is today, and that it will be
so.
programmable, right?
Yeah.
So let's say you eat too much red meat
Yep.
in 20 to 30 years. That's going to be problematic because that profit that you've made, you actually can't have it.
That's terrifying, eh?
So
I
that's
hope
not
that
risk,
doesn't
is it?
come.
Like that's horrible, right? It's dystopian.
Yeah.
Do you think that could come though?
Well, I mean, anything's possible. I still feel like there's enough clever people around that will be able to. I'm not clever enough at articulating it. That's why I'm never going to get into politics and stuff. But I think there are people around that understand this stuff and can explain it clearly and concisely and get people on board, and they will get in there and clean it up.
You think so?
Yeah. I'm bullish on humans and productivity and stuff like that. Like, we have solved we are the peak animal on the planet, right? We've solved every problem. That's why we're still here and the top of the food chain and stuff. So I just think that, I think that it'll get solved, but in between, it will probably get trialed. Yeah, and that won't be nice.
If we were to say next 1 to 5 years, as it relates to CBDCs, what do you see happening in the next 1 to 5 years?
Launch, trial, being used by certain sectors of society.
So you see it being rolled out, trialed, and then potentially implemented by a small section. Do you see it being programmed, or do you see it being kind of like the initial launch as being more of a watered down version of it?
Yeah, a lot of the papers explaining what it is say that it's private and it's not programmable and it's literally just peer to peer and stuff like that. It'd be very hard for that stuff to start straight away and get away with it.
Right. So you think it would be something that gets another layer that gets imposed on
for sure
later on?
Kind of like DTIs. Like, we have this lending system, we have a property market, you can go and get your loan, and then all of a sudden it's too much, boom, another layer.
Sure.
You can only borrow 6 times your income now. And I think it'll be something like that, because
the property market is getting out of control. We need to help it, so we're going to activate this other macro tool now.
Yeah,
so
or too much meat is being bought.
Yes.
We're going to put this thing on top because, the farms are struggling to keep up with capacity and the price is going, whatever it is.
Yeah. Okay.
I think that's probably the way that it'll come in. I mean, to be honest, this is all speculation. I don't really know. I just think that it's got.
To be honest, speculation is all we got, right?
Yeah, exactly.
We really
I don't really know the people working on it. I know some people that do know those people, but yeah, I mean, I hope the end result is just like pro-Kiwi, pro-human, and we just end up with something better. But
I hope so too. 10 to 30 years, what do you see?
That's an interesting one. It's only one or two outcomes, eh?
Dystopia or utopia, right?
Yeah. We've already seen some clever people that understand Bitcoin and stuff take their 24 words in their head and leave. I have hope that might get recognized and be like, that's a real brain drain, because those people do understand and do want New Zealand to be a really special place. There's not that, like, you can make a few changes, of course, and go down that road. And just that movement, just a couple of different changes, or one of those people getting into the political side of it and talking about it openly and articulating it well, could have a greatly ambitious future for the country. And I would sit in that camp.
That's a good camp to be in. It's happy.
Yeah.
It's a happy camp.
Yeah, well, I mean, again, once you have saved in Bitcoin for a while, it's hard not to think of a positive future.
That is really ultimately like the message I wish people had.
Yeah.
Sorry, I wish people received when they heard the word Bitcoin, is that it is a message of hope. It's not a message of speculation and risk and uncertainty and something criminals use and it's bad for the environment. It's a technology. It's a savings technology that gives us hope.
Yeah. And then the other one is people don't catch on and it gets dark.
Yes.
But I still think even if it went dark first, it would come out the other side,
Yeah.
Humans for thousands and thousands of years have beat the odds, and I don't see that changing regardless of what happens. I think there's always someone who will stand up and change the direction and go for the fix.
Yeah.
And I think we've got more tools than ever to actually have a fix, right? Like, even with AI and stuff, I'm not into that rabbit hole as much as I got into the money, but there's some cool stuff coming there that's going to make life pretty abundant if we get it right. And I would go down that road rather than we're going to be killed by robots, because we're too good, eh?
Yeah.
Yeah. And we're too clever, especially when we join forces and build teams. And yeah, I'm pro-human, man.
That's good.
Yeah.
Well, that's probably a really good place to finish up on. So let's give the people some places where they can go to find you. Where on, like, because you're fairly active on Twitter, on X.
Yeah, X, Instagram, I'm official Mikey Smith. X, I'm Mikey Smith NZ. LinkedIn, Mikey Smith. Our company is guardiansmith.co.nz, and most people who do know me have probably heard me on the Keep the Change podcast, which Luke runs, and I'm sort of semi-regular on there, running my mouth. That's more like, let's get after it, provide value, and convert into profit, and making sure, and believing in yourself and knowing that capitalism, well, not for, he doesn't mention this, I mention it a lot. I'm like, yeah, capitalism.
That's awesome.
Because I think society benefits from it greatly. But yeah, so that's where a lot of people know me from. But otherwise I'll just be CEO of Guardiansmith, just growing a giant company.
Cool, man.
Yeah.
Keep up the good work, dude.
Yeah, you too, man. Thank you for having me.
Cheers.